Hello and welcome to the Summit 2020 by the Ellen MacArthur Foundation. The Summit is a platform where innovators, leaders and pioneers share their perspectives on how best to transition to an economy which is resilient and regenerative by design. In this series, we're exploring what the circular economy means for leading financial institutions. My name is Emily Healy. I am the project manager for our finance initiative at the Ellen MacArthur Foundation. And today I am delighted to have Keith Tuffley joining us virtually in the studio. Keith is Managing Director and Vice Chairman and Global Co-Head of Citi's Sustainability and Corporate Transitions Group in banking, capital markets and advisory. In this role, Keith advises CEOs, CFOs and boards on transitioning their businesses towards a net zero emissions and sustainable future. Welcome, Keith. Thank you so much for joining us today. How are you?
Good, thanks, Emily. Great to be here with you.
Great. And so I know Citi has recently announced a new 5-year sustainable progress strategy to finance climate solutions and reduce climate risk, which also includes financing the circular economy. So I wanted to kick off by asking, what led you to start exploring the circular economy at Citi?
Yeah, so we, as you'd mentioned, we've just announced this new strategy, and we've also, as part of this, formed this new group that I'm co-leading, which is our Sustainability and Corporate Transitions Group. And look, in the context of history, what we've found is in the last 10, 20, even 30 years, the world has been very much focused on climate change as being sort of the primary issue to address, and certainly in the private sector, an increasing recognition that unless we address and solve climate change, it's not good for business, it's not good for finance, it's not good for economic growth or prosperity or inequalities in the world. But increasingly we're recognising it's not just climate change, it is also about biodiversity loss and the implications that we're having on nature and biodiversity. And thirdly, it is also about creating a system that addresses the actual drivers of these problems. And that is very much about circularity. It is about the ability for us to fit, 7.6 billion people growing to 10 billion people on this planet in a way which is harmonious with the planet and is sustainable in the future. And so increasingly, we at Citi and other banks and the finance sector are recognising that it's only good for business. And it's a need for us to be part of that transition as part of that drive to create a circular model for our economic system. So we're delighted to see this progress that's being made, and we're very, very committed to being part of it and to be helping to drive this effort towards a circular system globally for all the products and services that we create, and recognising that it's a deeper and more complex problem than just climate change, albeit that in itself is a massive challenge. And so as part of our 2025 strategy, part of that is about our commitment to finance and facilitate $250 billion of work to drive a low carbon economy. And to do that, one of the elements of that is about circularity. It's about creating that circular economy. And so there's some of the drivers behind both the creation of our 2025 strategy, but also the development and creation of our new business, the Sustainability and Corporate Transitions business.
And you mentioned there that you see circularity as being good for business. So as a bank, where do you see the greatest opportunities for circular economy to create value, both at Citi and in the industry more broadly?
Well, yeah, we do break it down to both what we at Citi can do, but also what we do with our clients. Now, we're no different to many other industries where we have a certain degree of impact internally within the bank. So the supply chain, the flights that our employees take, the emissions that we create through our own buildings, etc. But in truth, most of our impact that we can have is with our clients, with both our corporate clients, our retail clients, and our investor clients. And that's through our lending, it's through the capital market transactions that we facilitate, it's through the advice that we provide to them. There's a whole range of ways in which we can directly impact them and also influence them. As the world's most global bank, we have enormous touch points throughout the whole economic system through corporate clients, investor clients, and retail clients on just about in every country in the world. And so being able to leverage the role that we play in the financial system with all these other actors is profoundly influential. And we have both the responsibility to play, but also it's in our direct economic interests and also for our stakeholders that we can be a catalyst, a facilitator for change. And that's been a big change in thinking within Citi, but also other banks as well, that we have a very important role to play to help shift capital from those businesses that aren't showing sort of the leadership or the innovation around climate, biodiversity and circularity to those who are, ensuring that we can shift that capital either through our lending practices, but also our role in the capital markets. So the biggest impact we can have is through the companies, the investors, and the retail clients that we work with, who we work day to day with. And as I said, often we act in a very trusted advisory role. So being an influencer with our clients through the advice that we give, the support that we can provide, plays a very important role in the transition to a truly sustainable economic system. And ultimately, that's best in terms of creating financial value as well. There's an increasing amount of evidence that a more sustainable and a more resilient business model is one that creates more financial value over time. And that's led to a lot more corporate interest and investor interest in the circular business models. So it's a very exciting time in history. We see this as being a crucial decade in addressing these challenges, but one which is actually not just good for people, but it's actually ultimately good for financial performance and prosperity, and also for reducing inequalities in the world.
And it's great to hear about how that's already creating value in your business. Can you give me an example of where you're already capturing that value of a circular economy?
Yep. So the best examples we can provide are getting with the clients that we work with. And so when you see the sort of strategies that companies are now pursuing in terms of helping to drive those circular business models, and recognizing that it actually creates financial performance by being more efficient. Some examples of companies that we're working with that achieve that, and to use the right metrics as well. So, for example, there's an increasing focus on creating the right metrics to measure performance. It's not just about cash flow, balance sheet, and profit and loss. It's actually about creating the right non-financial KPIs. And a good example of the sort of financial instruments that can be created off the back of non-financial KPIs is the KPI-linked bond, or the sustainability-linked bond that NL, which is Italy's largest company by market capitalisation, that they issued last year. And that's a great example of innovation. So you've got this whole realm of new non-financial KPIs that companies are now providing to the market, very much led by the perspective of us achieving a net zero emissions economy by 2050, and then bring that down to 3 or 5 or 10-year targets consistent with a 2050 goal. And then linking a financial product, in this case, a capital market bond, with, in the case of NL, with their drive towards a low carbon business model. So for them, it's about creating more of their production through renewable energy sources. And so with their innovation, it is linking the coupon on that bond to the achievement or the failure of that non-financial KPI. So that's a great example where you're linking financial product innovation with the corporate and sustainability strategy that companies are driving, which, what does it do? It reduces risk for investors. It drives higher financial performance for the company. It creates great brand value for the company in terms of driving further innovation and leadership. And it leads to a new realm of innovation in other financial products. So we see it as a very, very exciting way to drive innovation in both the company and also the financial markets, greater investor support for such products, and ultimately for NL, they achieved a lower cost of capital as a result. So this is one simple example of the sort of innovation that we're now seeing and driving.
That's a really interesting one, and I'm wondering, what sort of response have you seen from clients more broadly? You mentioned that it's been positive, and that there's been a growth trend. Are your clients asking for this more and more?
Yeah, they are. I mean, it's been a massive change in the last, I would say, 18 months to 2 years. And I'll talk sort of pre-COVID and post-COVID. So pre-COVID, in the last 18 months, enormous interest from both corporates and investors. And we've seen this, through a number of drivers, not least of which is the Paris Agreement in itself. So since then, there's been a focus on, what the ultimate goal is in the Paris Agreement, which is a net zero emissions economy by 2050 to achieve a well below 2 degree outcome for the world. That was one key driver. And another is, in fact, that for investors, an increasing recognition that their clients, their investors, are increasingly looking for their investments to be consistent with their values and to create a better world and a more resilient world. And so investors have been increasingly raising new funds that are sort of ESG focused, and that create a new realm of again, innovation and support for investors helping to drive companies, and companies, leading companies, showing investors how their performance is improved because they're becoming more sustainable. I think in the last 18 months, there's been increasing recognition that there is this link between sustainability and financial performance. Now, it's not always the case, but generally speaking, there's growing evidence of that. Now, since COVID started back in earlier this year, we were initially concerned that we would be seeing a lower amount of interest in sustainability and circularity, but in fact, it's sped up. There's been an elevation of the interest, both from governments, companies, and investors, and that's really has accelerated the interest in these three, what I put in the three big buckets of climate change, nature and biodiversity, and circularity. And of course, they're all interrelated, because circularity ultimately is the best solution to address the other two. So we're seeing a real step up in interest, driven by a number of factors, by companies and by investors, and also governments. The more that we take these innovative ideas to them, such as sustainability-linked bonds or sustainability-linked loans, the more that there is a response to it. We're also seeing, for example, a greater amount of interest in financial instruments that are linked to biodiversity and nature issues. So again, that's another growing area of interest. But the area I think that the one that's going to have real growth in the next few years is going to be around circularity. That we're seeing that enormous growth, especially with investors, and a growing understanding and awareness of the importance of business models that really are using and redeploying resources efficiently and getting away from this linear production system that we've based our economy on to date. But that's changing rapidly.
So you've talked about innovation in new financial products, which can help a circular economy, and how you see that there's going to be growth in future. So where else do you see financing the circular economy going from here in future, both at Citi and in the industry more broadly?
Well, look, I see the fundamentals of the concept of circularity, I think, are there, and credit to the MacArthur Foundation for helping to define those, but also bring together the right actors to help disseminate the understanding. So I think the general concept of circularity is now better understood. I think what it comes down to now is execution. It's to be able to put that into practice in a way that demonstrably is seen to be creating not just financial value, but clearly value for other stakeholders as well. So it's now about what I call about scaling this up. It's recognizing that, again, we have to address climate change, but we can't do that without also addressing nature and biodiversity loss, and at the same time creating the circular business models that we need to solve all three areas. And I think that's the key now, is to be able to scale this up, ensure that we're not just focused on climate change, ensure that it gets the appeal of key investors, not just sort of ESG investors, but it's able to be embedded in investment activity more broadly. So create the environment where impact investing becomes the norm, not just a niche business. At the same time, with companies, is recognising, especially those that have a linear model currently, is a recognition that they have both a responsibility but an opportunity. This is about creating new business models and new ways of doing business, not about giving up financial value or just doing it because it's the nice or right thing to do, but actually because it's going to be driving financial value. We're seeing this being a very exciting decade for a lot of these business models to emerge, but now it is about scaling up the concept of circularity and driving it into business models and investment behaviour, investor behaviour more broadly. There's obviously regional differences as well, so addressing this in Europe, the Americas and Asia, there are big differences there. So as a global bank, we are focused on how we help scale this up regionally and not just sort of one model fits all, because that's not appropriate. So we do see it's been a very exciting time for this to be scaled up and be driven in practical ways in business models and investor behaviour.
Well, thank you, Keith, for sharing that. That's really interesting, and very excited to see where this goes in future, and looking forward to working further with you on this. I hope you enjoyed that conversation as much as I did. And if you want to watch more sessions in our series on financing the circular economy, you can catch up on the Summit site or on our social media channels. If you want to dive into this topic in even more depth, we've recently published a paper which gives even more examples of circular economy financing in action, which you can find on the Ellen MacArthur Foundation website.